Welcome back, investors, to Ticker Time News. I am Adam. Thank you for joining me for the After Hours show. I am glad you are here with me. Remember, this show is for you. So if you have a question, leave the ticker symbol and the question in the comments. We'll go over it live during the show. So I hope you had a wonderful week in the markets. Today is Friday. Today is Quadruple Witching Day, Quadruple Witching Friday. The S&P 500, it rose 1.2%, rounding up there a little bit, 1.17%. So we can round up to 1.2% for the S&P 500. This was an excellent week. As a matter of fact, we need to update our chart here on the S&P 500. We haven't done this in a while. So first thing out of the bat, while you get your questions ready, I'm going to go ahead and update this. First, we got to the 16th, right? So we can take this line out because the 16th is gone. It's behind us. We don't need that information anymore. We can also take this red arrow out as one of our probabilities, right? If the Fed came in too hawkish, that could have sent the market down. We can take our green arrow out. Although I like it, it's pretty, but it's in the way now that the stock market has gone exactly in that direction. So we can take that line out. Now, what we need to do is our top box here, up here at, call it 45.90. 45.90. We can stretch this box out, because this box could be coming into play soon, okay, as a resistance area for the market to test. So right now, we've got that. Okay, now the yellow box at the bottom, we need to relocate this. Now that we had those new lows come in, we need to take this box down a little bit, okay? So I'm going to move it down, and I'm going to put the top of the box at 4,200, okay? The top of the box is going at 4,200. And the bottom of the box, I'm going to leave it right where it is, because that was the low hit on February the 24th. 41.14, and the bottom of the box is at 41.17. So pretty darn close there. So we're going to leave this box alone. All right. So now that we have a cleaned up chart here, also this purple bar here running diagonally, this was resistance for several weeks, actually a couple months. I'm going to thin that down because it's not as important anymore. It will remain important for a little while if the market goes back down. As an area of resistance when the market comes back up. So I'm going to leave it there for right now. So here's what we have going on. We had the death cross here that occurred on March the 14th. This is all about the S&P 500, okay? On March 14th, the S&P 500 hit a death cross. Now, I posted a video about the death cross. You can search for it, Ticker Time News, Death Cross. And I went back over the past several years, all the way back to 2008. I looked at all the death crosses that occurred. And all but one, we had a snapback rally. As soon as the death cross occurred, we had a snapback rally. What did we have today, or this week, I should say? When that death cross occurred on March 14th, that was a down day. For the S&P 500, it was down 0.7%. That was the last red day of the week, the 14th. The last red day of the week, right? And then we had giant gains, 2.14%, 2.24%, 1.23%. And then today, 1.17%. In the video that I posted about the death cross here. Going back and looking at all of the different death crosses that have occurred in recent history, the snapback rally meant that we were going all the way back up to where I had this purple line drawn, and this is where the cross occurred on the death cross. And it occurred at 4470 on the S&P 500. We closed today at 4463. Today's high was 4465. So we pretty much closed at today's highs. 5 points away from our target right here that we set right on here at March 14th at this low. And there were a couple of factors that gave me the confidence in putting that line there and saying, this is where we're going. The factors were the death cross occurred, and the death cross is a lagging indicator, meaning the market's already been in a downtrend by the time a death cross occurs, right? So a death cross. We also had significant deviation from the highs here to where we were on the 14th. We get to the close there for the 14th, down 13.4%. So we were down a lot for the year, okay? But we were also down a significant distance. I believe it's about 7%. We were down, I think, right about 7% on the 14th from when the cross occurred, the death cross occurred, to where we closed on the 14th. We were about 7% away from it, okay? So these were all factors that went into what's happened in the past, recent history, at least the past 10, 15 years. Whenever a death cross has occurred, if we had these factors, a healthy pullback, correction, we were significantly below the death cross. And another thing that we could put here is we were making higher lows on the S&P 500. I'm going to take the volume away for just a moment so we can really get in here and look. And again, this is the daily chart for the S&P 500. And on February the 24th, that's when we hit the lowest low intraday, where the wick of the candle is the lowest. And that was 4114 on the S&P 500. The next low came in on March the 8th, and that low was 4157. So we made a higher low. The next low was the 14th. And that 14th, the low was 4161. This was our third higher low. Okay. All of these signals, the death cross, being down significantly in a correction, being significantly down below the crossover point, having higher lows, were all signals that said this would be a snapback rally. And you can go back and watch our live stream on the 14th and 15th, okay? This is when I put that line here at 4470 and said this would be a snapback rally, and it sure was. Now, there was a very important thing that happened today with the S&P 500 that is very positive. And that is, I've got this little note up here at the top right of the screen. It says reclaimed its 50-day moving average 4433. So there's a light blue, baby blue line coming across the chart here. It is just slightly below the darker blue line at the top of the channel. And that baby blue line, that is the 50-day moving average. And it's at 44.33 right now. We closed 44.63 above it. So the S&P 500 is now back above, and it has closed above its 50-day moving average. And I haven't talked about this a lot here recently because we've just been moving down, but the 50-day moving average is a very important line. Remember, I used to say almost every live stream, bullish above, bearish below on the 50-day moving average. Well, it's a true statement. It's something you can go by. So this nice snapback rally puts us right around this 44.70 mark. We're just 7 points away from it. We got within 5 points of it at the highest point today. As a matter of fact, if we go look at the 5-minute chart here, this is the 5-minute chart for today. You can see that we rallied right up until 15:30, right? So 3:30, the last 30 minutes, we kind of just moved sideways. We had a red candle, not that big, 0.2%, and then another red candle that basically call it flat. So once we got into 45 minutes of the close, the market stopped. The market took a breath, and the market didn't move. Just continued moving sideways for the last 15 minutes. And I'm going to put volume back on here to show you this. Look at this, ladies and gentlemen. I have showed you this many times before, time and time again, but this is going back several sessions. And the volume bars, if I'm going to go in here just a little bit, okay? These volume bars, the last 15 minutes of the day is when you get the highest volume, okay? It's been that way all year long. And a lot of times it's a sell. It's red candles, high volume, the highest of any point throughout the day. I'll zoom in here just a little bit more on these couple candles right here, and you can really see that. You can see these peaks right here. This is the 5-minute chart, so each candle is 5 minutes. So for the last 15 minutes of the day, there's usually big selling going on, right? Big selling going on, big selling. And see how high this candle is here? Let's see here. Volume for this candle would be 334 million, the tallest one. This one would be 328 million. And then the one above my head would be 317 million. So the highest would be the 334 million within the very last 5 minutes of the day. I want you to look at the volume candle for today. For the last 50. It makes those big candles look like dwarves. Remember, the biggest candle was 334 million. What was volume in the last 5 minutes of today? 1.5 billion. Oh my goodness. The top for the past 3 sessions was 334 million, an average of 61 million. And the last 5 minutes of today was 1.5 billion on volume. That is huge, massive. And the average is 119 million. 1.5 billion in 5 minutes. 1.5 billion trades in the last 5 minutes, and the average volume was at 119 million. That was incredible. That's why today was a quadruple witching day. That's why today was a quadruple witching day. It meant that today was going to see some really big volume, and we did. You can see the big spike in volume today. We did full on the S&P 500. There were 4.05 billion transactions, and the average is 2.89 billion. So big volume today. Now the RSI has just gone straight up, man, straight up. It's at a 58.3 right now. Money flow though, it's not at its peak. RSI is above its short-term peak right now, but the money flow, it's nowhere near its peak yet. It's still sitting at what here, a 50, right? And I mean, it's gone as high as 96. So it's still low. So there's still money on the sidelines that can come into this market and make things move. So we have our target. I'll call it hit. We're 5 points, literally 5 points away from our 4470 target. We got to 4465. So I'll call it a hit, 5 points away. Not too bad. Especially when everything has just been going down and down and down. It was nice to call this and get it right, but everything was just lining up so perfectly. Here's what we need to watch for next, okay? Now that our target here is hit, the next area of resistance, and I'm going to hide volume again so I can get in here a little closer on this chart. The stock market doesn't go up forever, so this rally is not going to continue for too long. But this top yellow box here, this is what we have to watch out for as a real threat next, okay? We do have to watch for our target here of 4470, that this doesn't become resistance. We need to break through this. Even if we have a red day on Monday, that's okay. You don't have, just all green days. There will be red days. So even if we have a red day on Monday or Tuesday, and then, Wednesday, Thursday, we come back up, we have to be able to break through this area here. And then the next area is this yellow box up here. This will be the next real resistance. That will be tricky to get through. And it's sitting right around 4590. 4590 on the S&P 500. And that'll be the real resistance here on the stock chart or the indice chart for the S&P. And then when we come down, we have to make sure that this purple line that's going diagonally across the bottom yellow box, wherever we are in the future, if we come back down this low, we've got to make sure that this that it doesn't fall below this purple line, because if we do, then we'll get a breakdown and the S&P will move lower. The next real line, and there'll probably be some sort of convergence here between these two lines, but this one, it could act as support if it comes back down this low again. So we'll have to keep that in mind. So in the market today, while you get your questions ready, That's my technical breakdown of the S&P 500 right there, okay? So there's where we're watching. We hit our target, 4470. We need to watch it that this doesn't become resistance. The real resistance is at 4590. That's the real resistance for the S&P 500. And then when we come back down, we need to see if this purple line going diagonally down here acts as support, or this bottom line that's going diagonally up acts as support. We want either or, and at some point they're going to cross and then start moving higher. The bottom one will start moving higher than the top one, and then the top one won't matter anymore. But that'll be very important that will hold as support there. Okay. In the market today, the S&P 500, it was up, as we talked about, 1.2%. Today was the quadruple witching Friday. The mega caps today, they just carried the benchmark indexes to its fourth straight advance, which is wonderful. We talked about how it got there. The NASDAQ was up 2.1%. The Dow Jones was up 0.8%. Russell 2000, it was up 1% all by itself. It did a great job too. The mega caps, they were the steady leaders throughout today's session. They lift the S&P 500 information technology up 2.2%. Consumer discretionary also up 2.2%. Communication services up 1.4%. Those are the top three of the list. And no other sectors gained more than 1% besides those three. And if you looked at the Vanguard Megacap Growth ETF, ticker symbol MGK, it rose 2.2% versus the more modest 0.6% gain in the Invesco S&P 500 Equal Weight ETF, ticker symbol RSP. So you can check that out. The utility sector was down 0.9%, and it was the only sector that closed lower. And remember, utilities, that is your defensive play. So people are going more risk on today in the market. Now, the stock market also appeared unfazed by the curve flattening activity in the Treasury market, which signaled underlying growth concerns. All right. The 210 spread, it narrowed by 6 basis points, with the 2-year yield increasing 2 basis points to 1.96%, and the 10-year actually decreasing 4 basis points to 2.15%. On the economic front today, we got existing home sales decreased by 7.2% in February to a seasonally adjusted annual rate of 6.02 million. Now, higher mortgage rates, rising prices, they weighed on sales in February, resulting in the slowest pace in new home sales in 6 months. And remember, yesterday, we got new home starts and permits. Starts were up, but had come down. They weren't as hot as they were in the prior week, in the prior month. But the permits were down and slowing. And that's usually a leading indicator to home starts, because you need to pull the permits first before you can start building. So if permits are lower, now mortgages are lower, well, that's not looking too good for the housing market. And again, with rates going up, that means it costs more to borrow money, and that means homes become more expensive. And they're already expensive in many parts of the country. They are out of reach, is the phrase I'll use. They have risen so fast, housing prices, that first-time home buyers are priced out of the market. They can't afford to buy a home. And that's really unfortunate. So we need more homes in the country, all parts. The stock market also appeared, and this is more of less of a daily thought on the market and more of a what in the world just happened this week with this big turnaround. Now, I explained it at the beginning with the death cross and the different signals that we saw that we were able to call 4450, I'm sorry, 4470, uh, as where we were headed by the end of the week. The stock market, it totally appeared to catch a lightning in a bottle. Is that the phrase? Catch lightning in a bottle? The the, the market rallied, and it was a strong rally. This wasn't just some a couple green days with, a tenth of a percent or, a half a percent. No, these were big, strong rallies. And it did it despite reports that there hasn't been any major progress in peace talks between Russia and Ukraine, despite the fact that there was word that China was locking down cities to deal with rising COVID cases, and despite the fact that a projection from the Federal Reserve that it's likely to raise its target range for the Fed funds rate 7 times in 2022, including the rate hike it announced this past week, the first of its kind since December of 2018, market participants, they also stared at the producer price index, and that report showing a 10% year-over-year increase in the index. Then they watched the 10-year yield hit 2.25% immediately after the Fed decision, and the 10-5 spread, well, that inverted. And after all that, the market rallied hard this week to post its best week since March of 2020. That hit home for many investors. What hit home this week for many investors this week in the stock market was the stock market was oversold. And we talked about this in several live streams going back to the 14th, 13th, and so on. The stock market was oversold on a short-term basis and even on a longer-term basis for many stocks that have, I'll say, crashed from their last year's high. And sure enough, many of the best performing stocks this week had been among the hardest hit stocks of the year. We also saw that today in the growth ETF versus an equal weight ETF. Growth took off 2.2%. So naturally, the question that everyone is asking, will this last? Will this rally continue? Will this rally go on to reach new all-time highs? Well, to answer that question, what happens between Russia and Ukraine, it holds some very important answers, but no one knows those answers. It's the wild card that we're all left holding. And here's a few other fronts that will need an answer to keep this rally going. Number one, inflation. And where is inflation heading? Are we going to peak here with our inflation? Or is inflation going to 8, 9, 10%? That's something we don't have an answer to yet. The second thing that we need an answer on or more clarity is the Federal Reserve and whether it's on track to really thread the needle, removing its policy accommodation, or on course to make a policy mistake that tips the economy into a recession. That's another unknown. Number three, the ceiling for interest rates. How high are interest rates going? if we truly get 7 hikes this year, I mean, are we going to 2, 3, 4%? Where's the ceiling on interest rates? 4, the trajectory of earnings growth. Where are earnings going? We see signs that the economy is slowing. So, have we seen for a little while the best companies will be able to do with their earnings? And is growth going to slow down? Or do we have one more quarter left of growth within these companies that we all love to invest in? And then the second half of this year is when it will hit, and companies will be seen to contract, growth slowing. We already see it with guidance. Who was it that came out with guidance today that was so much lower? Uh, let's see. Do I have it here? Oh, yeah. US Steel. Ticker symbol is X for US Steel. Um, they guided Q1 EPS below estimates. So, one of the core companies keeping our country going, steel, and they're guiding to slow down, to slow their growth. And they're not the only ones. And then the fifth thing is COVID, and how long will it linger as a drag on productivity, a disruptor to supply chains, and just a little bit of fear back there, right? How long is that going to stick around? Because the news of China this week, it kind of reacted, the markets kind of reacted to it, but not really. Not really. And then last, number 6, a matter of valuations. Are valuations still high on, let's look at the tech company, the tech sector. Are valuations too high? Have valuations gone up too much? Heck, it doesn't have to be the tech sector. Look at any other sector, and are valuations still too high? We definitely could consider what occurred with this market correction as a valuation reset. So, are valuations finally reset and we're ready to go from here? Or is there still some valuations that weren't cut low enough? So those are 6 things that we really need some answers and clarity on if we're going to continue this rally. You know, the volatility that we have seen so far in 2022, it's a byproduct of the heightened uncertainty regarding the outcome of these 6 uncertainties that I just mentioned. So maybe we hit peak fear at the death cross on March 14th. Maybe that was peak fear. And maybe now these answers will be easier to answer, right? Moving forward. All right, here's where we stand year to date. The Dow Jones is now only down 4.4% year to date. The S&P 500 is down 6.6% year to date. The Russell 2000 is down 7.1% year to date. The Nasdaq still in correction territory, but a lot better. It is down 11.2% year to date and marching back up. All right, let's check out Bitcoin. Sure, I got my cursor here. BTC. USD for Bitcoin. And I want to make sure I get Coinbase here for its data. All right, so Bitcoin, it was really seen as an early indicator, right? Because Bitcoin hit its bottom back on January the 22nd. And remember, in the equity markets in the S&P 500, January 24th and February 24th were two significant bottoms in the market. For Bitcoin, it was January the 22nd, and it's been running ever since. And now I've got this projection right here, this red circle highlighted in yellow. This is where I see Bitcoin moving to in the next coming days. By the end of March the 31st, Bitcoin will be right here in the middle of this red circle. Will a breakout come before it, or will a breakdown come before the end of March? Or is Bitcoin just going to continue marching sideways, making, look at this, making higher lows, which is important, making higher lows and just continue moving right through this circle. You got the circus and it's just, jumping, got a dog jumping through the hoop there, right? Or is this more like a cannon and it's being shot out and it's going to shoot up or do something, right? Something like that. But anyways, Bitcoin's up 2% today, 41,763. Let's look at Ethereum, ETH, USD on TradingView. And then we'll wrap this up. It's Friday, keeping it short. Okay, Ethereum is up 4.95%, call it 5%. It's at 29.54. It's doing good. Now, Ethereum, remember what I just said about Bitcoin? Is Bitcoin headed for our circle, or is it going to break out beforehand or break down? Well, look at Ethereum. Ethereum in this wedge pattern, it's further ahead because if you notice, the circle here is a lot smaller for Ethereum. And if we really did take it out to the end of March, which is out in this area, March 31st, the lines would have already crossed and Ethereum would have broken out or broken down before then. So Ethereum chose to break out, which is great, up nearly 5%, we can call it, for the day. So now that it's up here, what's it going to do? Can Ethereum continue its run and get back up above this plane right here, this price of 31.65, or is this it? I would really like to see Ethereum. See this high right here? This high right here. These two on March the 1st and March the 2nd. They are right about 3,036. 3,040 was the high and 3,045. So if Ethereum could get to 3,000, 3,040 to 3,045, that would be a really good sign because that's what you want to see technically. You want to see a coin or security break above previous highs, okay? And here's Ethereum here. 3,040, 3,045 is where we want to see it. Today, it did not break 3,000 so far. It only got to 29.87. So we want to see it break that 30.40 and 30.45, somewhere in between there, and that would be a great sign because then it's making a higher high. Because now, at least what it's been doing, it's been making lower highs and higher lows, and that's how we get this wedge pattern. But now that we've broken out, we want to see it back above that 3040 to 3045 area and make a higher high. That would be the best sign for Ethereum. Okay. Well, I want to thank you all for joining me today. Remember, I do this live stream every day the market is open, 5:30 p.m. and the live stream is for you. So if you have a question, just leave the ticker symbol in your question in the comments, and I am glad to go over it anytime during the show. So just remember that. If you are watching the replay of this, leave your ticker symbol and question in the comments, and we'll go over it during our next live stream, which will be on Monday. Yeah, today's Friday. I thought today was Monday after I said that. Monday, the 21st. Okay. And make sure you are subscribed, smash that like button, share this video, click the first link in the description to beat the market with us. And make sure you definitely make sure you are subscribed. Sunday evenings live stream, I talk about Catalyst Watch, what's happening in the week ahead. So make sure to catch that Sunday evening. And then I've got a whole bunch of videos coming out over the weekend. So make sure you're subscribed. Click that icon button so you get notified every time a new video comes out. So thank you all so very much for being here with me, and I greatly do appreciate it. Totally love the questions, engagement, love it all. Love you. Have a wonderful weekend. Hope you did great investing this week. It was a totally awesome week, and next week we start anew. So I'll see you in the next video and live Sunday evening. All right.